The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
It's Friday. It's actually Black Friday, so calm down. You can watch Squawk Box and then go shopping. How about that? You're watching Squawk Box, of course, with Karen Cho and myself, Steve Sedgwick, and these are your headlines. The Japanese yen surges against the dollar, whilst the odds of a BOJ rate hike jump on stronger than expected core inflation in Tokyo. President Biden, who is a man who's put up a lot of tariffs against the Chinese, by the way, takes aim at Donald Trump's proposed tariffs, warning they're counterproductive.
We have an unusual situation in America. We're surrounded by the Pacific Ocean, the Atlantic Ocean, and two allies, Mexico and Canada. And the last thing we need to do is begin to screw up those relationships.
France's Prime Minister makes a key concession in budget talks. But the National Rally warns it may not be enough to put off a no-confidence vote early next week. Aviva reportedly approaches Direct Line shareholders after its board rebuffed the insurer's advances, contacting investors direct, potentially paving the way for a hostile takeover.
How you doing?
Very well, thank you.
You shopping?
Not yet, it's a bit early. It's only 6:01.
What are you talking
Give me
about?
time.
I thought you were the queen of cyber shopping.
Well, of course I have been this week, but as you know, on the day, Black Friday.
My duel with a certain Japanese sneaker maker is not going well.
Of course it's not. I told you. If you haven't seen the discount yet, it's not magically going to appear.
Well, talking of Japan and lack of discounts, see what I did there? The yen is surging against the dollar after Tokyo core inflation came in higher than expected in November, up 2.2% on the year. Lynn joins us with more. Lynn, everywhere I look points to hiking or tighter money in Japan, but are they going to be resistance given the political situation and, let's be brutally honest, the struggle for independence over at the BOJ?
And I would add on to that, Steve, as well, the external situation as well, and perhaps what could be coming on the tariff front from President-elect Donald Trump. But certainly, as you've sort of outlined already, we have seen that market reaction off the back of the front-running Tokyo CPI numbers for this month, really sort of, I guess, raising those bets that we could get another rate increase come December the 19th. When you look at the yen, when you look at the rate-sensitive 2-year JGB yield, for example, also if you look at the swap market as well, that's now pricing in about a 60% chance when it was sitting at around about 35% just a few weeks ago. But digging into the numbers, it was 2.2% for the core CPI. That strips out, of course, fresh food. It was only 10 basis points higher than what market consensus had it at on an annual basis. But as one of the economists we spoke to earlier, Martin Schulz, highlighted, households are struggling with the inflation because, this is a country that for decades was dealing with prices staying stagnant or falling. Certainly when you look at particularly food inflation, that's you've got rice, for example, which is at a record high in terms of prices there. And then also you've got energy subsidies. They've been done away with in part for the month as well. So these are sort of the main components causing this to rise. But as some of the other analysts we've been speaking to have highlighted, it's still, very uncertain external market and, external environment as well. And so, it's still unclear, and perhaps they'll need to see a few more data points. Also watching out for perhaps more announcements coming through from the president-elect there as well in terms of what the move will be. And, I suppose also on the political front, we do have a minority government. They have an extraordinary diet session which was convened yesterday. We're expecting the Prime Minister to give his policy speech at some stage this afternoon. And, we are talking about a weakened government who is, putting forward delivered a stimulus package of 13.9 trillion yen there, and also having to work with some of these opposition parties, particularly as it relates to perhaps basically decreasing some of the tax rates as well there, guys.
Lynn, thank you very much for bringing us the detail around that CPI story and what it means for rates in Japan. The latest reaction, as you can see on the equity markets, Japanese stocks peeling back, just moving modestly south, but there have been some tariff concerns in the backdrop as well. So another layer on top as we talk about some currency fluctuations. The trade 0.5% in the red. The Kospi, though, moving further into negative territory, down 2% for South Korean stocks. But in the middle again, Hong Kong and Chinese stocks managing to move higher. So what we're seeing today, moving the needle on the direction for the Shanghai market, 1.3% gain. To what we're seeing on dollar trades, and it's been a weakening trade over the course of the trading week. And you can see morning session, euro dollar supported, we're 105.67, marching up by about 0.1%. Similar percentage gains for sterling, cable managing to climb through the 127 handle. Dollar yen, as we've been talking about from the headlines, on the back foot, thanks to that ascent that we're seeing in the Japanese yen. And it's a fairly sizable one intraday, isn't it? 1% pop there. Dollar also sliding versus the safe haven Swissy. As a result, treasuries, don't forget, they are being impacted by Thanksgiving and the trading action being shut over there. There is a brief window of trade till about 2 o'clock when markets open up later on today stateside for Black Friday. And you can see treasuries this morning with 4.21, the 10-year 4.23. The opening calls. This is how Europe is setting up for the trading session. You can see we are looking for a little bit of green. There's not a huge amount of direction. In fact, the DAX is flat, but we're chasing about 16 on the FTSE. Yesterday was a day in the green, led by the German stock market. We bounced more than 0.8% versus less than 1/10 on the FTSE. So it was a little bit of upside for these boards, but this morning does look like we're trapped in somewhat of a range, and no doubt because of lack of direction from these US markets. US futures, as we traded into the finish before Thanksgiving, these markets did break a 5-day winning streak. The Dow was down by about 1/3%, similar sort of ranges on the S&P 500. But as the markets look to get going for a brief trading window before it's all about the shopping action stateside, there's a modest upbeat trade that is indicated on the board so far on what is still a big day of consumption. Different type of consumption away from Turkey towards the shops.
I have to go shopping today because I have a birthday that I have to acknowledge on Sunday for an important other who may or may not be Mrs. S.
You just have to acknowledge, you have to...
I'm going to have to lose. I lose. Retailers 1, Sedgwick 0, because I have to pay up. I don't have a choice.
There is another option. You could switch gifts, so you wait for what you were going to buy on the birthday to be discounted over Christmas.
No. That would require imagination, which I have none. I wonder who first said, do as I say, not as I do. I wonder. I'm sure there's many historical versions. And I feel a bit like that about Joe Biden today. Because listen to this. US President Joe Biden says he hopes President-elect Donald Trump will reconsider his plan to impose tariffs on Mexico and Canada. Speaking to reporters in Massachusetts, Biden said creating trade tensions could damage the country's ties with its closest allies. Well, with respect, this is a man who has put quite hefty tariffs on the Chinese, hoping to get a better trade relationship. Anyway, let's listen in to what he said.
I hope he rethinks it. I think it's a counterproductive thing to do. You know, look, one of the things you've heard me say before that we have an unusual situation in America. We're surrounded by the Pacific Ocean, the Atlantic Ocean, and 2 allies, Mexico and Canada. And the last thing we need to do is begin to screw up those relationships.
Because Beijing said it will extend tariff exemptions for some US imports until February. The items that will not be subject to additional restrictions include rare earth metal ore, medical disinfectants and batteries. Let me get to Bob Parker, Senior Advisor, International Capital Markets Association, and someone I actually always listen to his answers. Unlike some guests. No, I do listen to all their answers. Bob, let me paint a picture for you. It's not my base case scenario, and I don't think it's anyone's base case scenario. But we have remarkably high valuations on the S&P 500. We have concern about a European debt crisis in one of its key countries. We have US consumer confidence matching the levels we were at in July 2007, which is quite a historic time. Plus other factors like we have an enormous war going on in Europe as well. Plus we have a potential trade war. Is there something brewing that we should all be worried about?
Morning, Steve. Well, I think you actually raise a very important point because you've just given us a list of factors which are not market supportive. But in contrast, if you look at all the surveys of investor sentiment, generally investors are positive on global equity markets and they remain very positive on the US equity market. And those investor positions are still clustered in, what we all call the Magnificent Seven, i.e., large cap US tech companies. So we do have a major divergence between, that quite long list of things to worry about and actually how investors are positioned at the moment. Now, the obvious question is, well, is that divergence going to change as we end 2024 and as we go into early 2025? And I think the answer to that question is yes, but not very significantly, because I think the fundamental question is, are we in a very similar situation where we've had market bubbles as in the past? So, for example, 2007 and, likewise, the end of 1999, beginning of 2000. And there we had all the classic examples of market bubbles, and that resulted in 50% plus bear markets. And I would argue that the outlook for at least early 2025 is rather mediocre in global equity markets, and a degree of caution is now required. But we're no way in the similar circumstances we saw before when we had market bubbles which inevitably burst.
Bob, can I just bring up some of the tariff ructions? Because to me, what was said from Biden yesterday was almost a hint at some of the turbulence we could see. The reality, in the commentary, we're surrounded by the Pacific Ocean, the Atlantic Ocean, and two allies, Mexico and Canada. The last thing we need to do is screw up these relationships, was his commentary. He's saying, isn't he, that we need to have allies. Don't use trade policy as a weapon against those who are friends. And even when it comes to China, we know how frosty that relationship was even until recently. It took Biden pretty much his entire term to try and thaw that relationship to ensure there was some communication. How important is it that we don't see tariffs ruin what has been a fairly smooth, even environment for investors?
I think the first point to make is that the messages we're getting from President-elect Trump are that yes, there will be trade tariffs being threatened. Whether those trade tariffs are implemented or not is another question, but certainly the threat is there. I think the second point to make is that the threat of trade tariffs is mixed with the sort of basically the pursuit of foreign policy. So, for example, in the case of sort of Canada and Mexico, the incoming Trump government, has major concerns about migration issues. And, that migration issue is primarily targeted at the relationship with Mexico. Mexico also has, one shouldn't forget, a trade surplus with the United States, somewhere in excess of, $150 billion per year. So, the incoming Trump government, first of all, has a problem with the Mexican trade surplus. It then has a problem with migration. And it is using this rather blunt tool of the threat of tariffs to try and address those two issues. I think it's quite interesting that we have this threat of increased tariffs and quite significant increased tariffs on trade with China. But, as you reported earlier in the program, the Chinese equity market is actually reacting quite positively today. And I think the reason for that is that investors are, number one, underweight China. Number two, they're assuming that, yes, there will be tariffs on China, but perhaps they won't be as bad as the Trump government is threatening at the moment. And obviously, we have this switch in Chinese policy trying to refocus the economy away from trade with America.
Bob, there's a lot in your commentary around positioning, and it is key, isn't it? Because one of the other big stories today is around Japan and whether we're looking at an inflationary story here that moves the BOJ again off the sidelines. And we know BOJ was one of the elements that roiled markets earlier this year as we saw the unwind of the carry trade. What do you think the ramifications are here if the BOJ does need to move on interest rates again? Do you think that there's going to be any market impact?
I think the first point to make is that the inflation numbers, and we had the Tokyo figures today, and the Tokyo figures lead the national figures by about 10 days. And the Tokyo numbers have been volatile. So this time, for the November figure, the Tokyo CPI, the headline number came out over 2%. Previously, it was below 2%. So, we do have this month-to-month volatility. Having said that, if you look at the trend for national inflation in Japan, both headline and core, I think it's reasonable to assume that it will trend between 2 and 2.5%. So, that is slightly above the Bank of Japan target of 2%. And I think it means it's near inevitable that the Bank of Japan will tighten monetary policy further. Its base interest rate at the moment is 25 basis points. Its meeting in December, I guess it will move to around 40 basis points, potentially 50 basis points. And a working assumption in the first half of next year is that the Bank of Japan key benchmark rate, will go up from 25 basis points at the moment to at least 50 basis points. So I think that monetary tightening, when the Fed is still easing, albeit very slowly, and the ECB is still easing, and with the ECB they're going to ease more aggressively than the Fed, that implies that further yen weakness is not going to happen. Having said that, the Japanese economy outlook is for fairly mediocre growth, only just above 1%. So, the case for a major appreciation in the yen is not there. And my central case is that we're just going to get stuck around 150.
Bob, long before people started talking about the GFC, the Great Financial Crisis, you and I, and I'm sure Karen as well, when she was in Australia, would have been talking about the European sovereign debt crisis as the core of some of the problems, certainly on this side of the Atlantic, Lehman's aside. I know that France isn't Greece. I get that. But France hasn't run a balanced budget for my entire life. 30 odd years and a bit more. Hasn't run a balanced budget for many, many years. This is a slow moving crisis. Is it now finally coming to the fore that the French are going to have to realise what the Italians, the Greeks, the Spanish, the Portuguese and the Irish realised back in 2007 to 2010, that you just can't survive at the largesse of others forever without balancing your books?
Well, I think you raised a very interesting point, which is that as at today, and this has actually sort of happened this week, which is that 10-year French yields have been equivalent or higher 1 or 2 days than Greek yields. And, I don't think you or I would have forecast that, in recent years. We also have, France potentially its credit rating being downgraded. And that's not surprising when, the French budget deficit this year, and this is sort of data from the French Ministry of Finance, the budget deficit this year will be around 6%. And that's in contrast with, the European Union guideline of having a budget deficit of 3%. So there is a major budget problem. There is obviously a major political problem. The Barnier government may be able to force through its budget for 2025, but it's only going to do that. We'll see this in the coming weeks. By the way, the deadline for the budget is the 19th of December, and they have to, achieve this consensus on the budget for next year. I think there is going to be a change, i.e., there are going to be fewer cuts in public expenditure and probably further increases in taxation, and that's what RN, Mrs. Le Pen's party, are arguing for. I think that's inevitable. The question is, are we going to have a vote of no confidence in the Barnier government? That is entirely possible, and investors are very nervous about the prospect of the Barnier government failing and the complete uncertainty of what happens thereafter. And as a result, I think there's a high probability that, French spreads, which are currently about 80 basis points over bonds, we may test 100 basis points. Are we going to spiral out to 150, 200 basis points? I think that's very unlikely. But I think that France for a period of time, we're going to see French spreads probably trade at the equivalent of Greek spreads, which, if one looks at the economic history of France and Greece, is pretty extraordinary.
It is absolutely extraordinary, and I look forward to seeing what happens, Bob. But as we quite hasten to say, they have access to capital markets. It's not a massive widespread, but at the moment, it is something just to be aware of. Bob, thank you very much. By the way, I'm very jealous you've already got Christmas cards behind you over your right shoulder. Extraordinary. I bet that's the ones from the kids as well, because they're normally very good at that at school, aren't they? But mine too old for that now. Bob Parker.
Yes.
It is, yeah. Grandchildren. Bob Parker, Senior Advisor, International Capital Markets. Thank you very much indeed. I presume you were in Australia in 2008.
Yes, indeed, working for a big network business correspondent.
Yeah, I thought you were.
Ahead on the show, French Prime Minister Michel Barnier makes a major concession in a bid to end a bitter budget standoff. Charlotte will have those details. Plus, Ireland goes to the polls in a closely fought general election. We'll dive into what's at stake. And we'll talk to a toy-making CEO as shoppers scour the internet for Black Friday deals. Tobias Wan will be joining us. The CEO of Tony's is coming up at 8:30 GMT. Israeli Defense Forces say they have carried out 2 airstrikes on Hezbollah assets in southern Lebanon, less than 2 days into a US-brokered ceasefire agreement, as both sides accuse the other of violating the deal. A look at what we're seeing on oil prices, both leaning positive in early trade today. Let's get out to Dan for more. Dan, you're telling us first up around the ceasefire, but what is a ceasefire when you do have the shots been fired, rather?
Yeah, that's exactly right, Karen. And what we're seeing right now is this fragile truce entering its 3rd day. I spoke with Lebanon's foreign minister overnight in a wide-ranging interview to get his take on the situation on the ground. He said his country had no choice in this decision to go to war with Israel. We also spoke about the future of Hezbollah's influence in the country and in the region. And of course, what needs to happen now in order to attract international support and foreign funding to rebuild Lebanon after months of destruction. Listen in.
We are receiving a lot of support from Western countries now. Second, I want to say that this story that Iran has running Lebanon is not correct at all. Iran has influence through Hezbollah on Lebanon, no doubt about that. But Hezbollah does not run Lebanon. We, of course, consult with each other all the time. Hezbollah is a very influential party in Lebanon, but it does not run Lebanon. If you look at our record in the United Nations of how we vote, you see our voting is mostly with Western countries and with Arab Gulf countries, not with Iran and not with the other countries, okay? So I don't know how you measure the influence. I have not been like saying great things about Iran or anybody else. So I don't know how you measure the influence of Iran in this country, except through the presence of Hezbollah.
Well, I think it's also fair to say that average, everyday Lebanese people are tired of this foreign influence. They want a government that is free and fair, that they choose on their own, not a government that is under the influence of Iran and of Hezbollah. Is that something that you could promise them in the future as Lebanon's economy continues to face crisis after crisis?
You know, this government is not under the influence of Iran. I say that. I mean, Iran has allies in Lebanon, no doubt about that. It's Hezbollah. But, I mean, this is like the cabinet is 24 members. They have 3 or 2 even. So, no, it's not under the influence. And how would the influence show? Okay, in the south, in the war, you know, I'll tell you, most Lebanese did not like the war. But also we do not like to have civil unrest. So, you know, choices in Lebanon, I have to admit, are between the bad and the worst. They are not between the bad and the good. And we pick the bad, better than the worst. So, no, so that's why you see we support Hezbollah, but we don't support the war, as the Lebanese are saying.
and the government had no say in the decision to go to war.
Lebanon's foreign minister speaking to me in that interview yesterday. And of course, what we are seeing on the ground now is both sides accusing the other of violating this very fragile truce. As I mentioned, now in its third day, this deal being brokered by the United States and France to essentially end the fighting that we've seen between Israel and Hezbollah in Lebanon. The question, of course, now turns to exactly what is going to happen next in Gaza, where Israeli forces continue to operate. And of course, the question of exactly how the Trump administration is going to be managing this situation in the next 8 weeks as well. President Trump, of course, vowing to bring that war to an end and to address the situation in the region. But of course, exactly how is a big question on the minds of many leaders in this part of the world this morning.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to CNBC.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabile Kumete, weekdays on CNBC.